why I have removed it. It's not like I was not using it. I was using everything. Okay, I was using everything. Why I have removed all these information points? The reason is simple. Is that if there is one information source telling me something, let's say I look at RSI. RSI tells me market is overbought. Okay, fine. It's a valid information. There are certain rules to interpret RSI. According to that, I know that the market is overbought. Then I look at some other piece of information, let's say open interest. And there also I see that market is overextended. With some analysis, I know that market is overextended. Then I look at Elliott wave chart and it tells me that, okay, this is, let's say, fifth wave extension. Then I go and I find some flying bat or, sitting duck, something like that, harmonic pattern that tells me this. Then I look at GAN and then I see, oh, this is a perfect time for reversal. Okay, time cycle matches exactly. This is the point where market is going to create a reversal. Now what is happening is, I am trying to find evidence that confirms my initial reading of RSI. This method is called as Confluence of Indicators or weight of evidence method. So I am finding everything that confirms my original reading of RSI or markets. And then I have said 10-20 things confirming that yes, you are right. Then I go and take a trade and I fail. That trade does not work. Now what is happening is, I have put in a lot of effort. I have done too much of work. I have analyzed 20 different analysis methods and I have confirmed that the market has to reverse from here. And it's not, it's going lower. It has hit my stop loss level. What do I, give more evidence to or more weightage to? My analysis or the fact that market has proven me wrong and has given me 1,000 rupee loss. To prove my ego right, I will go on throwing money at the markets. I'll say, okay, why 1,000? Let us increase the stop loss in this particular case to 5,000 because so many factors are in favor. It will take 5,000. It will take 10,000. Then finally you will realize, oh, your interpretation of RSI itself was wrong. Oh, GAN said this but not this. And the flying bat works like this, but if this happens, then it fails. What is happening here now is, now all 10-20 analysis methods that you used, everyone will have an exception. Everyone will have an additional rule. And this goes on compounding very, very quickly. Suddenly you are left with thousands of rules, thousands of exceptions, thousands of special situations. And all you had to do was, respect your 1,000 rupees stop loss. Now, this has happened with me for too long a time to not pay attention to it, to not learn from it. So what I'm saying is, I'm not saying OI is wrong. But the moment you start using open interest analysis to confirm your market profile analysis, everything goes haywire. Now, what I do, I'm using Wyckoff, Peter Steidelmeyer's 4 steps of market development, auction theory, and innovation adoption curve as a foundation to my trading. These are not trading methods. There are no setups there. There are no trade indicators there. These are philosophies that help me understand the market. Good. Then what I'm doing, these are the foundation. This is the foundation. Now this is Wyckoff and all those 4 things I mentioned. Now on top of that, what I am doing, I am putting market profile. This is my trade idea developing tool. To some extent, I can also use it to execute my trade. So, but primarily the objective of this is to help me develop a trade idea. Okay, this is happening. Like in today's market, there is a poor low yesterday, follow through not good, A and B had a lot of overlap. Now I have a trade idea in mind that, okay, this is not looking good for buyers. In the short term at least, buyers should go lower, explore lower levels. If I get a good shot at higher levels, I should take it. Get my point? This is the job of this market profile. Now on top of that, I put something more. Now that I have the idea, how do I execute on it? Where do I exactly sell? When do I know that, okay, I'm not taking on too much of risk? So I use volume spread analysis. I may use order flow. I may use price action. I may use RSI. I may use anything that straight away gives me a execution level, a execution signal. So let's say I'm using VSA. Let's say I'm using price action and I get a signal to sell. And then I have certain amount of stop loss. I calculate my position size based on that and I take that trade. Okay. Now what is happening? Now I have just single method telling me where I should enter and what will tell me that I am wrong and I should exit. So now what is happening is I don't have this upper level cluttered with too many things. So it is something like this, what you are trying to do. Now what you have done is this last level where you want to execute, you have 1, 2, 3, 4, 5 multiple tools that will create confusion. Now if this is wrong, you will have an exception. If this also goes wrong, you will have an exception. Now obviously the trade is proven wrong. This also will have an exception. This also have a separate rule. This also have a separate rule. Now all these rules will, create too much pressure on your mind. What am I doing? I'm just using this. I don't need all this. Okay, so let it go away. So I'm just using this. My trade works fine. I have the clear criteria to book my profits, reference levels, everything. I book my profits, I am happy. My trade does not work. My stop loss is hit. Okay, fine. I exit my trade first because this is what the top level is telling me. Once I have exited my trade, now I come back to the development area. And then I will ask myself a question. What went wrong? Did I misread the context? Was there a factor that I did not consider? And then I will learn here, I'll improve here. This is just an execution system. And the real learning understanding comes here. Now, if I cannot make sense of something here, I have the foundation to help me. I have to go back to Wyckoff, I have to go back to auction theory and ask myself question, okay, this is what auction theory says and this is how it looks on the charts. This is how you develop a trade idea, and then I go back again, I take another trade if it develops, and then I execute and then it works because now I have learning. What people are doing wrong is they don't have the bottom two layers, they just have this. They only want to time their trades. Now not only this, they will bring everything back. They are only using this. Nothing to do with foundation, nothing to do with trade development, nothing. No context, no logic, only timing. Do you think it is going to be a successful journey for them? A pleasant journey with peace of mind? No, it's not. So, although individually each and every method is good, when you combine all them, they are just serving one purpose. Now, there should be one tool to serve one purpose. And if you do not have one tool for one purpose, if you have multiple tools for single purpose, and you are ignoring some important things in your trading, you're not going to become successful. So please understand. I hope this analogy, helped a little, and it helped you understand why I am not using multiple tools, different tools to give me answer to the same question. I want one tool to answer one question at one time for me, and that keeps me sane, keeps my peace of mind, and helps me learn, find the root cause. Otherwise, if you have, let's say, 10 different indicators telling you what to do, and if one is wrong, you will ignore that, you look at the other. But you will never learn something about that particular tool that went wrong or that gave you the wrong signal. Alright. So I hope that helps.